Hello students, this is Professor Vicente Saga. Welcome to my class. This is the presentation of part 4 of chapter 5, Evidence and Documentation. This is where we left off in part 3. We talked about the reliability of types of evidence. Here we are going to talk about the audit testing hierarchy. So here is an evidence decision process for testing significant balances or classes of transactions. I know it might be very difficult for you to see this, but you might want to go ahead and take a look at your PowerPoint on your laptop to go through these together. So let's take a look at what we have here. The question is, after assessing the potential effectiveness of internal controls, will test of controls be conducted? In other words, after we assess how well the internal control is put together and how well the internal control is implemented, of course, as you know, the purpose of the internal control is to prevent or deter situations, error, or fraud that might cause misstatements to the financial statements. So after assessing the potential effectiveness of controls, now with test of control, should we go ahead and test those controls? If the answer is no, why would it be no? Because we might decide not to rely on the controls because we think that the controls might not be working. That is one of several reasons why we might not want to rely on the controls. So if we decide not to rely on the controls in terms of determining how much work we need to do, then the next question is, can effective and efficient substantive analytical procedure substantive analytical procedure be performed? Now, we did talk about this in previous chapter. What is substantive analytical procedures? Meaning we are using analytical procedures to test our account balances. So, for example, the example I just illustrated, our client has 10 employees and the average employees make $50,000 salary a year. So we can easily say that if that is the case, $50,000 multiplied by 10 employees, that will give us $500,000. So give and take, the salaries expense on the income statement should be $500,000. So if, for example, the income statement reflects $499,000, then we have used substantive analytical procedure to test that particular account without getting into all the details in terms of looking for the timesheet of the employees, their contract, the checks that they receive from the company, so on and so forth. We just bypass all of those because we are using a substantive analytical procedure because it is more efficient than doing a lot of digging, all right? So, can effective and efficient substantive analytical procedure be performed? If no, then we perform substantive tests of details on transaction or balances. No, if no, then we have to do a lot of digging. But if yes, then we perform the substantive analytical procedure. Is additional substantive evidence needed? Yes, then we do more digging. No, we document the result. So let's go back to the beginning. Say, after assessing the potential effectiveness of internal controls, will test of controls be conducted? We said here the answer is always yes for public traded company. Why? Because as a publicly traded company, the auditors of publicly traded company are required not only to audit the financial statements but also to audit the internal control of the company. So therefore, you really don't have no choice but to test internal control if you are auditing a publicly traded company? So if the answer is yes, you perform test of controls. Now, if those controls, the question is, are those controls working? Excuse me. Can effective and efficient substantive analytical procedure be performed? If yes, we do it. If yes, is additional substantive evidence needed? No, we document result. Yes, we perform additional substantive tests or details. So moving along, let's take a look at filling the assurance bucket. What are we talking about here? Look at, from the outset, when the auditor performs a lot of audit procedures relative to risk assessment, that gives them some assurance. Then when they test the controls and the controls are working, that is additional assurance. Then when they perform substantive procedures, so all these procedures are being performed in order to give the auditor assurance. Example of filling the assurance bucket for each assertion is more specific. In this case, accounts payable. All right. Now, let's take a look at the second part of this chapter, audit documentation. We said that the auditor's record of the audit procedures performed, evidence obtained, and conclusion reached. All of these stuff are all documented or reflected in audit work papers. We said that the audit documentation, we also call them working papers, has three functions. Okay, this is very important for you to know. Number one, it provides support for the audit report. What does that mean? Your documentation is your evidence that you actually did the work. So it actually supports the audit report that you eventually issue. So all those working papers support the final report. Number two, to aid in the planning, performance, and supervision of the audit. Of course, when you are putting your planning in place, who is going to be responsible for what, you have to put that on the paper. When you are actually performing the audit, you actually have to use paper, and you need to play everything out on paper in terms of what you are doing. See, if you do something and it's not documented, it is just as good as not doing it. And supervision of the audit, okay, that is obvious. Then number three, it also provides basis for quality reviews to provide evidence supporting the auditor's significant conclusions. So your working papers also provide the basis for quality review, for peer review. Another CPA might be coming to do what we call peer review, meaning your peer will review your stuff to make sure that you are following guidelines when you do audit. So in such circumstance, your working papers will also be used for that purpose. So moving along, let's take a look at the content of audit documentation. Audit documentation should, this is very important, demonstrate how the audit comply with GAS. All right. So in other words, somebody go through your audit working papers, they should be able to find adequate evidence that you actually comply with generally accepted auditing standards. Number two, support the basis for the auditor's conclusion concerning each material financial assertion. And number three, demonstrate that the underlying accounting records agree or reconcile with the financial statements. So the ultimate financial statements that are being produced, the working papers should be able to demonstrate a link between them. Moving along, let's take a look at additional issues. The audit documentation should include a written audit program. We talk about audit program, right? A set of audit procedures used to test assertions of a particular issue. Audit, okay, also enable a knowledgeable and experienced reviewer. So when an experienced reviewer or another auditor look at your working papers, you really don't have to be there for that auditor or that knowledgeable person to actually take a look at what you did and make sense out of it, because every work paper has a story to tell. Okay, so understand the nature, timing, extent, result of audit procedures, and the working paper should be able to help them determine who did work, who did what, and when, so on and so forth. Moving along, content of audit documentation. We said that most public accounting firms maintain audit documentation in two types of files. We have permanent files, we have current files. Information or documents that hardly change from year to year, we put them in permanent files. So when we come back to audit decline the following year, there is no point of reinventing the wheel in terms of the content of the permanent files. Then we also have current files. So here are the examples of some of the content of permanent files: chart of account, corporate chart, and so on and so forth. Now for the current files, the contents change every year: the audit report, the audit plan and programs, working trial balance, so on and so forth. Now let's take a look at the format of audit documentation. Now, every audit firm format of audit documentation varies. However, there are a lot of things that are very, very standard when you look at work papers of any audit firm. Number one, the heading. Every work paper you are going to see 3-line items: the entity name, that is the name of the company you are auditing; title of the work paper, what you are auditing, for example, prepaid expense testing; entities year end, the year or the end of year that you are auditing; indexing and cross-referencing. These are notations that provide a trail from financial statement to the audit documentation. So cross-referencing, I'm going to talk more about that in the classroom. Tick marks are notations made next to work paper items indicating auditor's reviewer. All this will make more sense to you by the time we work on cases relative to audit documentation. So we said that it should be organized so that auditing members and others can find evidence supporting financial statement audit. So it has to be systematically organized. All right, it is the property of the auditor. The law says that the auditor should not keep their work papers for 7 years from the completion of the engagement. Purposes of analytical procedure. We talk about analytical procedures. This is very important: risk assessment, substantive analytical procedure, final. So essentially, auditors use analytical procedures really in 3 different stages of the audit. Number one, at the beginning, during planning, and it's actually required that you use analytical procedure, right? For example, you can do comparison between 1 year and the other in terms of the financial statement balances to see whether anything will pop up, any unusual or significant differences. Then you can also use analytical procedure, like we just discussed, as a way of actually testing account balances. So we call that substantive analytical procedures. Then upon the conclusion of your audit, you can use analytical procedures to review the financial information in the final review stage of the audit. So here we have types of analytical procedures: trend analysis, ratio analysis, reasonable analysis. Now, let's take a look at the substantive analytical procedures decision process. So you might not be able to see these, but I think this would be a good point for us to wrap up part 4 of this presentation. We conclude the remaining part of this chapter in part 5.